You're most likely flipping through the charts every single day, trying to find a play that looks good. You go through the end of the day and like, oh my God, I missed the giant move down. And that's what we're going to explain here, because in my opinion, when it comes down to trading, there's three concepts that we have to be following to a T to make sure our success continues over time. These are three things that changed everything when it came to my trading. And once I focused on these, it made me a lot of money in the long term and the short term. I do want to add these build on each other. So the first adds into the second adds into the third, and they all kind of complete each other as you use them in time, and ultimately synchronizing them all together. Don't forget to subscribe. Let's get to it. Okay, so rule number one, and what we're going to do right now is we're going to focus on trading 3 to 4 stocks. And I say this all the time, but I don't think people focus on this enough. Now, this does count for SPY and QQQ. So if you're going to trade them, then guess what? You got to mark them. So for the sake of this video, I'm going to mark SPY. I'll pick one of the indexes. I'm going to mark some slower movers like Google, because I do like slower movers. I'm going to also mark Apple. I think it's something that you have to always have on the watch list. It's mandatory. So really off the bat, you're already going to have 2, SPY and Qs, and then 1, most likely Apple. And then I'm also going to add Tesla. I do like a fast mover. And then I'm going to also add in NVIDIA, another fast mover. So what I have in this, actually, I already have 5. So we're going to get rid of NVIDIA. You can really replace NVIDIA and Tesla in this list. I like Tesla structure and movement, but that's what you're going to focus on. So then you're going to go into your list. These are the only names that I'd be focusing on. That is it. Now, the point of this is because you're a beginner. If you start over complicating, you start over adding, different stocks into your portfolio, it's going to add issues when it comes to day trading. Okay. Now, the first thing I want to explain to you why we do this. Okay. Really simply put, you need to understand how these are moving every single day, right? So if I look here just on the day, if I'm just looking at Friday, we go into the act, this is the 5-minute time frame. You moved from 278 into 280, back down to 274, back into almost 280, back down to 274, right? Great movement overall. Now, if I go into something like Apple, I know off rip on Apple, you're generally not going to move $5 in a direction ever in a day unless it's very bullish or very bearish. So we go from 191.5 into 190.3, back into 192. So it's almost like a $2 range all day long. And you're going to kind of see the same trend overall, about $2, $3, whatever it may be. Now, this comes right into play with options and understanding how those move. And that's why I kind of keep this in, the back of my mind is Apple's a safer name to trade. I'm not going to get too crazy on options, whether I'm trading weeklies, monthlies, whatever it may be. And again, you're going to know how all these move over time. So the reason why you have these is you're focused on these no matter what. These are your bread and butter. You got to learn how these move and focus and stay true to them. Same thing with Google. We come back in here. We know Google, it's not going to be a huge mover. Around 118.5 into 121, about $2, give or take, back down, right? Same type of trend. Some days it moves really good, but generally it's $2, $3 mover. But we also know when it comes back down into these key levels, this is the other big part of this of why you only focus on a few stocks. Because when you focus on stocks that are, moving within their 50, their all-time highs or wherever inside their range, something that's 9 to all-time highs already in price discovery, the key levels always remain the same. So when you watch our old videos and you watch how we trade supply and demand, this demand level is still going to be there when you come back down. It's still relevant. I don't have to do any more work to this chart. It's going to all be relevant to where we were, the same key levels. And you know what? That 122.5 level that we had marked out way back here, guess what? That's where you're getting rejected right there once again. So these all stay tried and true. And that's why we want to focus on a few key names every single day when we're trading. So when we're trading 3 to 4 stocks, I want people to not look at this from a bad viewpoint, because the first thing you're going to do when you're trading 3 to 4 stocks is you're going to see one stock that's going crazy and you're like, I missed it. It's because I'm only focusing on 3 stocks. That's not the way to look at trade. Looking at everyone else or outside influences are going to damage the way we trade. If I could, I would throw that into this list of stop looking at everyone else. Focus on yourself. Your growth is all that matters here. So what we're doing is honing in on what matters. Of the 3, 4 stocks we like and figuring out how those move, and we're going to master those. Then we can expand slowly over time. But especially while you're not making money, we need to figure out why we're not making money and then hone in on how we can make money. All right, so for part 2, we're going to be focused on risk to reward. Okay, this is I'm not kidding you. Once I started focusing on a few stocks, not 10 different ones, I focused on risk to reward on those few stocks. It started really narrowing down what type of trades I can and cannot take. So when I'm looking at something like SPY, and this just gives you a really good example of, why I'm focused on trading the trend. If you watched the last video, I recommend watching my last video. It was pretty good at explaining the trend and understanding how to trade it. in times like this. So if I'm looking right now, if I'm going basically over the past, since October, okay, this is almost a year, about 10, 12 months right now. So if I'm just identifying how we're moving, right, just clearly making higher lows, nonstop pushing up really roughly. If I am looking at trying to short, let's hypothetically say I shorted every single top. I shorted the top here at, 418. Okay. Realistically, tight stops, whatever it may be, ultimately your targets would have to, you would have to target, local lows. And yeah, they're kind of there. So if I'm shorting, I'm getting a 2-hour trade potentially. That's if I'm trying to say you're going to break out into 421. It's just something that I'm not looking at doing. But let's say hypothetically, I'm going long. Okay. I'm trying to long this trend. Risk reward gives me clear cut answers and results into where you can let runners continue to go. So if I'm shorting at the bottom down here where you're making a higher low and just stops a little bit below your previous low you had there and back into local highs, look at the risk reward. 6 compared to what I was getting at a 2. So 6 to 1 for every dollar I'm risking, I'm making almost $7. Then on this as well, you can continue to see time and time again, you're making higher lows and higher highs here. So the same thing goes for where we're at now. So when we start to look at how we're moving based on risk to reward and everyone's saying to short the market, you're going to catch the top. Very seldom will you ever catch a top. So if you're shorting at exactly at highs, which you're very rarely ever going to time the top or time the bottom, understand that. But just realize you have to really open up your stops as well, because you're really going to try to set them at the big resistance at 450 and you're really widening that out. So your ultimate target would have to be basically at previous lows, and your risk to reward is a 1.5. And again, if you don't understand risk to reward, watch the videos we have on it where we really break it down. But it's going to open up and change the way you're trading, because I see a lot of people that are, taking scalps, and this is really where this is focused on. When we're focused on taking scalps, we need to be focused on making money on these plays over time. The goal is to not take 50 different trades. The goal is to take 5 really great trades. Because if we can win on 3 out of those 5 really great trades, 9 times out of 10, the risk reward is going to be fantastic. For instance, we look back at how we're moving back here. So you're coming right back into previous highs right there before you got rejected, came down, mounted and flipped. And this was one of the trades we mentioned on Twitter as well. And so you can see, ultimately we went long right there. We had a little bit of a looser stop, but it wasn't anything crazy. But ultimately you're targeting back into previous highs. That's your target. Great risk to reward, exactly what you're looking for. Would I rather trade the chop all the way down when I'm probably going to get stopped out of something that I'm interested in, or the IV's going to get destroyed on the option contract? Or would I rather get the immediate reaction from that said support, as well as trading within the trend? So once we start to identify the setups that we're playing and making sure the risk to reward plays out, I'm only taking trades that fit my criteria of maybe a 3 to 4R trade. Sometimes they're never really going to be that high of 8R, but they have the potential to if you let them run and have time on contracts. But we need to understand what we're playing and ultimately how we're trying to make money in this market, because that's ultimately where you're going to have all your plays, and you have to make sure your winners greatly outweigh your losers. Now, risk to reward, it ties right back into this. And again, you're going to notice a common theme when it comes to my channel and how I trade. It's all about getting smaller and smaller and smaller windows, right? If you aim small, you're going to miss small. Shout out Chris Kyle. But it's true. We need to focus on making sure our winners are greatly outweighing our losers. I know if you're watching this video, you've seen trades where you win 2 or 3, but then one trade wipes out all the rest. Again, that is a very common issue. And you're going to notice when we look at this strategy that that's not taking place here. That the focus of what's happening is our winners are greatly outweighing our losers. So 2 winners can replace 3 losers. And that's going to be the going basis here. Narrowing it down, what we can look at, and then finding the best opportunity there. Now, going into the last step, it ties all this together using our strategy that we've already focused on, but it's going to show you 2 examples of one that's kind of good and then one that's really good, and why the risk plays a major part in this. Now, I can't harp on this third part enough. It's sticking to my strategy. And again, you can watch Trading the Trend. You can watch this 3-step video going over how we're trading SPY. You can also go into the VWAP, which is a great video, supply and demand. These all break down the strategy more and more and more. But again, as we get back into the video, the goal is to, 1, we're focusing on only a few names, right? So just a few 3 random names we're looking at. Let's go for Tesla, for example, on this one. And if we're looking at Tesla, in my opinion, when you zoom out, you can clearly see, I believe you're making a flag at previous highs here. And so what we're going to do and identify here, and we're looking for, is we're focused on one stock in particular. We're focused on risk to reward and then sticking to our strategy. So how we're trying to trade this one, we know we're clearly in the upward trend. Risk to reward tells us a few things here as well. So we go back down to the 15-minute chart. And all we've really been doing over the past few days and weeks here is trying to just trade this uptrend every time you get the opportunity. So we plug back in our VWAP and our 90 MA. We're also going to get rid of those bands because we know we don't like those. And again, this is all in the educational video there as well. So we have that previous high marked out here, that range that we're looking at, why we like it. We all know why. So we come back down, we hit it once, we bounce, we get back over VWAP, get above 90 MA, you trend back into highs. Now, again, you can go to the 5 minutes to get more clarification on these regions as well. So clearly here on Tesla, you got back up to 90 MA, you pushed into 278 for a clean cut scalp. Now you come back into this level once again, you're trading it above the 90 MA, you trade back into highs again around 280. So again, from 276 into 280, another great trade. Now, you can also, again, this is where people start to get away from their strategy. They get away from it. And this is the common misconception here. So we look at Tesla, we're like, we're at support. We've always bounced here. This is the gambler's fallacy. It worked before, it has to work again. We're not focused on that. We're not focused on just buying the support. You only do that if you're just buying stock. When it comes to options, you need confirmation. You have to stick to your strategy. So for here, I'd be waiting and I'd be patient. And I'd flip over to something a little bit more in my favor. Again, so what we're going to do is go back into something on the list like Apple, like Google, like SPY. These are all the ones on our list. And so Apple has me a little bit more interested here. Although Tesla's on its support, I'd be coming out here and I'd be looking at a few things. So really quickly, we can see we are making higher lows. You did break trend roughly right there. But what we'd be looking for Monday morning here is to get back above VWAP and then ultimately back above 90 MA as well, trading back into the upside. Why? So we zoom out really quickly into the 4 hour. We can also see we're clearly still holding the giant uptrend here on the 4 hour, which you already have marked out as well from previous overall trends. That's what we're really focused on is the higher time frames. Also marking out previous highs here as well. And we also know Apple's going to be a little bit of a slower mover. So if we're trying to buy support, we're trying to get a little bit more risky here. What would I rather do? Go with a quick mover like Tesla or go with a slower mover like Apple? So what do we know here as well? We know the stops are going to be a little bit tighter here on Apple. We're going to lose less money if we are wrong. But we still have a lot of money and a lot of potential to make money here on Apple with how we're moving here as well. So again, we go back to the 5 minute, we go back to the full screen. What are we looking for here? Well, we can see a few things. We have the higher low trend coming in right there, very close, and the previous highs there as well. So we want to see a reaction getting back above the VWAP as it comes down and the 90 MA trading it back to the upside. Very similar to what we saw where? Right here in the past. We had that previous high there, the higher low trend coming in. We're bouncing off of it, pushing back up, get above the 90 MA and moving back into the previous highs there, moving really nicely. Apple, a $2 move will make you your money. And that's what you're looking for here. Over and over, repeating the same cycle. There's no complications here. There's no confusing task here. It's using what we know and applying it over and over, time and time again. Now, again, names like Tesla, will you have opportunities to trade this down here? 100%. But we need to identify with Tesla, what is happening here? If we are trying to go long at this support down here, understand your stops have got to be very, very tight. And I just want to give you a quick example here as well for there. So going to a long position, throwing that up, going back into full screen, as you can see. So basically what you're doing is you have a giant gap. And what does that mean there? When you have a giant gap like this, it means there's an illiquid zone. So you're going to have a lot more risk here. So what do we know here? If we're going into a play, we have to have very tight stops, really tight. So that's what you're looking for off rip. So you still have a great risk to reward here. But again, you have to be able to identify your stops are going to be really tight. You have to be able to make sure you're going to get out of those because if you start dropping, it could drop in a hurry. That's why we like something like Apple because it just lines better up with what step number 2, risk to reward, especially when it comes to looking at our strategy and for potential setups. Okay. Now I can go down a laundry list and show you setups that have already worked, but that's not going to give you any more clarification here. But go check this out after the video going into next week. Today's Friday, July 7th, 2023. Go look at, July 10th, July 11th and see how we played out and how we respected these levels. Because at the end of the day, your stops are going to be tighter. You're going to have an easier chance to get out of your trade, lose less money, but still make a lot of money to the upside there with the clear uptrend still intact.